Hello, everybody, and welcome to the 68th edition of LM's Weekly Wrap, our weekly program to cover the market related developments. This week has been a kind of a very busy week as far as the domestic markets as well as the international markets are concerned. Starting off with the international markets, we've seen a lot of volatility. Markets were looking forward to Powell's speech, which took place yesterday. We had the 10-year benchmark bond yield very close to 5%. Crude is on the boil. We are seeing the geopolitical tensions and all sorts of problems which have been engulfing the globe. So I think more light will be thrown on the global markets as well as the domestic market related developments by Jash, who is joining us today. Welcome, Jash. And kindly take us ahead on the developments, market developments, which will be followed by the sectoral outlook from my side.
Thank you so much, sir. I'm going to start with the domestic markets over here right now. The Nifty levels, it is at 19,550 to 19,600 levels. It has remained under pressure, of course, after the Powell's speech yesterday. This week has been kind of a roller coaster. There has been a lot of pressure on the markets. There has been kind of a profit booking. The market is trying to stay resilient, but the bears are taking over. Somewhat the bears are taking over. We need to see how the geopolitical issues plays out, and also the US markets and other markets shape up. That will decide the future for the Indian markets. But also, as far as Indian markets are concerned, there are a lot of trigger points for India. The consumption theme remains very strong. The festive season is extremely strong. The whole market is looking forward to it. There is a data where they say in 23 days about 35 lakh weddings are going to take place, where about 4.5 lakh crore rupees is going to be spent. So I think these are huge numbers which will lead to intense consumption. And now coming to Powell's speech yesterday, basically the numbers are the growth story remains intact over there, which they have come in a fix on what to do about the rates. They are saying some kind of tightening may come in, but they can't tighten it extremely in the near future, because that will lead to a complete slump of growth. So there is a very they would say a difficult situation that they are in. So, but they have definitely said that there is going to be tightening in the coming few months. Also, the data of the summer, the inflation data was very promising, but the current data is not so good for the inflation. So, of course, you need to keep a watch over there. So that is why the Dow yesterday went from flat to negative and closed there. So that's what exactly what has impacted the Indian markets today. Apart from that, I think the Indian story remains extremely buoyant, and we are going to see some more action in the coming week with the results coming out in the next week. I'll hand over to Nirav sir for the domestic markets. Thank you.
Thank you, Jash. So yes, Powell has still not declared full victory over inflation. I think as if one were to put it in cricketing terminology, I think the winning shot is yet to be hit. So I think probably we are at towards the end of the match, and the war against inflation has nearly been won, but the winning shot has not been hit. So the final declaration of victory has not yet come from Powell's side. So that is one thing. We start off with the coverage of the results season. I think the domestic markets, we are seeing the earnings season progress in full flow, and we've seen different sectors report numbers. We've seen different companies report numbers, so we just have a quick snapshot of all those numbers, because results are the best barometer of what is expected going forward. The commentaries from the companies are very, very critical. Starting off with the IT sector, which generally tends to declare its results first. Results were disappointing. We've seen most of the top rung IT companies trim their revenue guidance. They've reduced their headcount, while the order inflows have been very, very strong. But most of the companies remain non-committal that the execution is going to pick up anytime in the near future. So I think a couple of quarters are definitely going to be a wait and watch situation for the IT companies. So best hope is going to be FY25, how the IT sector plays out, the execution plays out over there. So that is one. Then we come off with the auto sector. I think we had very strong set of numbers from Bajaj Auto yesterday, up about 6.5% in trade. I think it's trading up in today's market as well. So with Bajaj Auto, we've been joined by Hero MotoCorp. Hero MotoCorp has also been one of the big gainers of this week. So I think two-wheelers generally tend to do well during the festival seasons, and I think this is going to be no different. We are going to see good numbers from the two-wheeler makers. Apart from this, I think Tata Motors has also been a top gainer amongst the top gainers of this week. So auto has done very well. Auto ancillary, maybe have Seat, which has done very well. A very strong performance put in by Seat, and we see positive impact on other tire makers as well. As far as banks are concerned, I think we had good numbers coming in from Bajaj Finance, and of course HDFC Bank also good set of numbers, IndusInd, but I think divergent trends again in the market. While IndusInd Bank was a big gainer in the market, amongst the big gainers, we've seen Bajaj Finance come down in trade. So divergent performances as far as this particular sector is concerned. Overall, banking has been under pressure in the markets. The next sector is cement. In cement, we've seen three companies declare the numbers: Dalmia Bharat, Ultratech Cement, and Sagar Cement. They've declared the numbers. And I think one very good factor is that there is uncertainty about the fuel cost, but at the same time this quarter has been we've seen a moderation in the fuel cost. So the energy cost has come down, which has translated into a good bottom line for the cement companies, and at the same time we are seeing a good outlook which has been declared by the cement companies. They seem to be pretty confident about the demand situation, and they're saying that demand revival looks very, very imminent, although it is very difficult to comment on the fuel cost, because it's very difficult to forecast the fuel cost going into the near future. So that is going to be an uncertain factor which the markets will have to look out for. The next particular sector which we'll look is FMCG. I think yesterday we had a whole host of FMCG companies which declare the numbers, Nestle being the clear-cut winner. I think this stock is up around 10% since the last 1 month, and I think winner all the way. It is benefited quite a lot from the demand, although volume improvement has been a cause of concern. I think volumes did not match up to market requirements, that is across the board. We've seen very lackluster numbers from Hindustan Unilever Limited, and they are also banking on the festival demand going forward, and they are cautiously optimistic about the future with a very close eye on the input cost. So that's HUL. We had ITC, which was a mixed set of numbers, and yesterday I think barring the paper and pulp division, most of the divisions have done well. And as we had indicated earlier also, that the reflection of this will come on the paper stocks. So today we've seen Century Textiles report very poor set of numbers as far as the paper segment is concerned. So I think that has weighed on Century Textiles numbers, and the stock is down about 6% in trade as we talk. Apart from this, I think we have a few wires and cable companies, etc. Polycab declaring a good set of numbers, but markets giving a thumbs down to the numbers. We have yesterday Voltas and Havels, which have declared the numbers, but markets have given a thumbs down to their numbers. We have some oil marketing companies which have also been under pressure. We've seen overall, I think defense and the railways continue to do very well. We've seen today Helicon Engineering declare a very strong set of numbers. So I think to broadly sum up, I think the earnings season continues, and we are seeing capital goods makers continue to do very well. To sum up, I think auto has been quite good, auto ancillary has been quite good, banking has been under pressure, cement has been showing some improvement. Infrastructure continues to do well. FMCG volume growth has been disappointing. Overall, it's been a disappointing picture as far as FMCG is concerned. As far as consumer durable makers are concerned, they are still banking on how things will play out as far as the festival demand is concerned. Rest today, I think, has been a day when market has been under pressure. So I think global cues will weigh on the markets, as we see in the global markets that 10-year benchmark bond yield about to cross 5%, and we are seeing FIIs being aggressive sellers also in the market. But that's been matched with some very good domestic buying. So I think that's keeping the picture going as far as the corporate sector is concerned. I think still many more results to come, and of course today we'll have JSW Steel, so we get an idea about how the steel sector is going to behave, and many more large companies yet to declare their numbers, so we get an idea about how things proceed ahead. Overall, caution is advised in this market because the geopolitical tensions, especially what is happening in Israel, remains a cause of concern, and with crude at $93. And one more that we are into a truncated week next week. So we have a holiday on Tuesday, and we have FNO expiry on Thursday. So I think that warrants some amount of caution in the markets. That's about all from my side. I'll hand over to Jash for the concluding remarks.
Thank you so much, sir. Thank you for the insightful session, and we'll see you next week. Thank you.
Thank you very much.